Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, we are going to talk a bit about currencies and just a little bit less about commodities. Currencies in terms of what's happening with our currency, the TT currency against the rest of the world. Secondly, the major currencies of the developed world, what's happening with that, as well as the BRIC countries, China, India, and Brazil, and what it means for us. We then turn to what currencies mean for your investment portfolio, and then have a quick look at two commodities which are critically important to us, oil and gas, and the implications therefore. Let's turn now to our first graph, which speaks about the TNT currency. Officially, the official rate has been moving up, if you look at that blue line, since October of last year. And it has moved from about the 635, 640 region up to 670 at last call last week. And you would see some of the movements shown in the boxes there to 650, 657, 685. What that suggests is that the currency, as you look at the pink block, has been adjusting downwards, and that the currency officially is down about 4% from where it was in October last year. But is it that? Because we also have, this is the official rate, but there is a tightness of access that is taking place. Word on the street is that in this so-called secondary market, the rate is about 720, 725. If that is the case, then the currency in the unofficial market has already deteriorated from about 11.5% to 12.5%. What does that mean for you, the investor, as we come back? It means for you, as the investor, that your value, your purchasing power has fallen away, one, and two, that your investment holdings in TT dollars, measured by world standards, has also fallen away quite considerably. The wealth effect, you are essentially poorer because of the currency adjustments. So we turn now to what's happening in the major currencies as our second graph. And you would see the major loser in terms of our major currencies is in fact the pound, which fell considerably from an average of about 152 US dollars to the pound. It has fallen to a level of about 128, 130 or thereabouts to the pound. A very significant deterioration engendered, of course, by the Brexit. The other currencies, if you look at the US, in the US euro in green, and the US to a basket of currencies, you would see some better level of stability. The euro back up to about $1.11 US. What's happening then, let's turn now to our third graph and look at what's happening in terms of what I would call emerging currencies, in particular the Chinese yuan, the Brazilian real, and the Indian rupee. What you would see there is that the real fell the most during the 1 year period and has recovered the most, so much so that for the year to date, the real has improved and regained about 17% of its losses, bringing it back almost to the level it was at the 1 year ago. As you know, the Brazilian economy is pretty challenged. The economy is declining, but yet still the currency and the capital markets are improving. Let's look at what this means for investors who have invested abroad. It could be in Brazil, it could be in Latin America through the Bourse Brazil Latin American Fund, it could be in India through the Save Invest India Asia Fund, or other such funds. So let's turn to our next graph. And what you would see, because of the currency appreciation in Brazil, clawing back from the lows, what you would see in terms of the local currency return, which is the yellow bar in Brazil to the left-hand side of your screen. But when the currency is taken into account and the appreciation of the currency year to date, what you would see is that there has been significant improvement brought about by capital appreciation and by currency. So those who are in Brazil and Latin funds have seen some sort of recovery, though not yet to the extent that is expected. India, the currency has been flat, and what you will see next is that the markets are up, but because the currency is flat, both local and currency and measured in US dollars are about the same. China is down, as you can see. And if you look to the TT on your right-hand side of the screen, because of the official rate currency adjustment, notwithstanding that the capital markets, equities that is, have gone up 1.2%, the markets are down 4% in US dollar terms. I turn now finally to the last graph, which shows the movement of oil and natural gas. And what you would see on that graph is the US dollar would have fallen to its low of about $26 per barrel in February and has recovered somewhat, but still over a one-year period is down about 22%. On the natural gas basis, what you would see is that in natural gas has recovered Henry Hub figures, that is, to 275 MMBTU from a figure a year ago of about $2.80, and it's about $2.80 now as we speak. Now, what does all this mean for us as you come back to me? It means that you as an investor find yourself in a situation with currency depreciation of the value of your investment portfolio in international terms falling. If it's all T&T dollars, then your purchasing power falls away, and it means that you have become essentially poorer because of the depreciation. What are the measures that one can use to resolve some of these things? Always diversification across currencies, as we have been saying at Bourse, is very important, as well as across asset classes. There is no gain saying that having all your eggs in one basket, whether it be in terms of currency, whether it be in terms of one particular asset class, does not give you the kind of diversification to mitigate against changes that are taking place in the world as we speak. Look for us on newspapers, where we give you more on this particular report, and more particularly on our website, bourseinvestment.com, which provides more graphs and more details about this. Our mutual funds, look in newspapers again, or on our website, where we can show you the changes that are taking place in the Save, Invest, and Bourse-denominated funds. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.